Are you an accounting or tax professional who wants to stay ahead without spending a dime? Join thousands who trust insightful accountant and tax practice news to keep them informed and empowered. Get expert updates on QuickBooks, Zero, tax planning strategies, and workflow tips delivered straight to your inbox. Whether you're a solo bookkeeper, firm leader, or tax advisor, these newsletters are your shortcut to what's next in the profession. They're free, practical, and built for people like you. Visit insightfulaccountant.com and hit subscribe to start your smarter workflow today for free.
You guys always get I always say that, and I need to update the picture of my kids because they're about 12 times bigger than that now. But there we go. We'll get going with our slide deck. So we're going to talk about updated tax laws today. We're going to get into it in just a minute. Just a reminder, and in case you didn't get a chance to hit that poll before we closed it, we do have the Caribbean cruise next summer with lots of great content, chance for CPE, some great networking. So if you didn't get a chance to hit yes on that interest poll and you want to scan that QR code really quickly, you'll get some information about how to join us when we set sail. Go ahead and grab that. And then I also just wanted to share that we do have Tax at Academy coming in 2 weeks, actually. So not next week, but the week after. That's going to be on Thursday, the 4th. I'm going to pull up the Q&A also, make sure that I can see that. Give me 1 second. I want to make sure I keep an eye on this for all of you. So the registration link for Tax Academy is going to be in the chat. If you are interested in joining us for that, go ahead and grab the registration link. We'll also send it out to you when we send out the slides. But we want to invite you to join us for that. We're going to be going over some top tax tech stack. It's a great lineup. I think some of the vendors are going to be offering services that you're going to be interested in specifically after we talk today about what are some of the changes that are coming down the pipeline and how to serve your clients, how to maybe add some revenue to your bottom line with these tax law changes. So that registration link is in the chat if you want to grab that. Again, it's going to be on Thursday, September 4th. Starts at 12. You don't have to stay for the whole thing. There's going to be 4 different vendors, so you can kind of pop in and out. We'll take some breaks between each one just to kind of see like how are we going to be driving efficiency this upcoming tax season, because we're definitely going to be facing a lot of tax law changes, not a lot of guidance from the IRS, and tech is going to be our saving grace for sure. Let's see. Already a question from Kathy. Did we ever have the webinar on the 990s fundamental step by? Yes, then that webinar was 2 months ago. That was our June tax talk. If you missed it, the video should be up on our YouTube channel. So that should be up and available for you. Just a reminder, really quickly, too, on our premium content. If you are not a premium content member, go ahead and check that out. Reach out to us, ask what that's all about. But there's some really, really great content from some really incredible speakers, different areas of your practice, everything from human resources, marketing, tax, like automations, everything. Behind the scenes and for those premium content members, including some like one-on-one kind of coaching style Q&A sessions with our speakers. So if you're not a member, definitely go check that out. And as always, make sure you're subscribed to our newsletter because that was a long list of events that we don't want you to miss out on. We want to make sure that you're aware of everything that's going on. Just a really quick reminder before we get started today, too, that this session has no CPE attached to it. So no polling questions, no CPE. It's just a quick half an hour little lunch break where we're going to try to squeeze in as much as we can talking about all of the tax law changes that are coming. If we have not had a chance to connect, my name is Christine Gervais. I am the co-founder of Cultivate Consulting. We are a small full service firm, mostly based out of Southern Maine, but fully remote practice. I've had my CPA license for about 15 years, and our practice looks a lot like, all of yours. So small tax and bookkeeping practice, and I definitely feel very similar pain points to all of you in terms of managing all of the things and providing great service to our clients. So I try to really focus on the things that are going to be highest and best use of your time when you come to our tax talks every other month. So welcome. I think that was all of our housekeeping points for today. So let's talk about something fun and exciting. We have a lot of tax law changes coming down the pipeline, actually already signed into law, but we haven't seen a lot of actual movement on these yet, meaning we don't have guidance coming in from the IRS yet. We don't see like a lot of these impacts actually, taking place in documentation and things just yet, but that doesn't mean from a practitioner standpoint that there's nothing for us to be going to do right now. Actually, there's a lot for us to be doing right now. And a lot of that is going to hinge around us having conversations and better planning conversations with our clients. And so that's a lot of what we're going to talk about today is what changes were made by the one big, beautiful bill. Try saying that 9 times fast. That was signed into law in July, and there's some immediate impacts, and that's most of what I'm going to focus on today, as well as trying to give you some ideas of how to kind of approach this strategically with your clients to provide better value, but also to maybe enhance that bottom line with planning and strategy revenue, because there's a lot of different places that you can approach this, both from a business and an individual tax perspective. So that's going to pretty much span all of our clients throughout. So we've got SALT changes, business deduction changes, personal credit and deduction changes. We've got changes to payroll that are coming, and we're going to try to touch on all of these as we kind of go throughout today. So the Q&A is open. Feel free to pop your questions in there. If there's anything that I can stop and answer for you, and then I'll try to kind of keep an eye on that after each slide to make sure that I'm answering your questions as quickly as possible. All right, so let's start with this big one, at least the big one from the majority of the population's perspective. This might not have the most immediate impact to us as practitioners, but you're definitely going to be seeing a lot of questions about this. If you're someone who prepares payroll tax returns or partners with payroll tax preparers to service your clients in that capacity, this is going to be something that your clients are going to be asking about. We now have no tax due on tip and overtime wages. So tips are now tax free, overtime wages are now considered tax free. What does that mean? We actually don't really know yet because there's no IRS guidance. So this is something that I think that I just want to really harp on for a second. If you read our newsletter, you've probably seen over the last month, I've written quite a few articles over the last month on the state of the IRS. We are seeing a humongous slowdown in communication, even more so than it was before, where the IRS is just really not responding to things on a timely basis, to the point where last month they actually issued a public release saying that they were accidentally sending out notices to taxpayers who probably didn't actually owe payments, but inadvertently the payments had not been processed into the system, and bills were going out saying that amounts were still due because those payments had not hit accounts yet. So we have a very slow IRS, which is not going to be helpful for a lot of these changes. I would highly advise you with this to make sure that you're connecting with any type of payroll provider that you're partnered with, if that's a Gusto, if that's a local payroll provider, just to kind of see, do they have any guidance that you can, if they've already done the work for you, do they have any articles or guidance that you can share with your clients? They'll love that because they get the marketing too. And your clients are going to get some answers around what's happening with this. So, importantly, you're going to probably see some questions. There's nothing that's going to be immediately different per se from the employee perspective. They're not going to see these changes impacting their paychecks. These are deductions that will eventually be taken on the individual's 1040. So, for example, if I am someone who's receiving tips as part of my pay at my job, I'm going to end up having a deduction on the back end for those tips. It's not necessarily going to immediately be affecting my paycheck. So that's something that you're going to want to just keep in mind, that I think a lot of people are wondering, like, what's the immediate impact? From the employer perspective, if you're working with small business clients and you're helping them with their payroll, overseeing their payroll, providing any type of payroll tax returns, employers are going to need to change how they're reporting this information on W 2s specifically. So if Individuals are going to be getting a deduction on the back end for tips and overtime. That's information that's going to have to be specifically reported on the W 2. Obviously, that means we're expecting some changes on W 2 forms and some guidance to come out related to those, but we have not seen that yet. Um, so you want to just basically keep in mind that we don't have guidance from the IRS yet. We're not going to see an immediate change in paychecks per se, but this is going to be something that's going to change all of the reporting on the back end on these forms as well as individual tax returns. So you're going to be having new line items on the 1040 coming up for this is related to 2025. So we are in fact talking about this busy season that's coming in the spring here, probably quicker than we'd like to admit. So that's probably all I'm going to say on this right now because we don't have a lot more guidance yet. But this is obviously going to affect tax planning for any type of individuals that you have on your client list who are receiving this type of income. But especially for those of you who are working with small businesses, especially restaurant, retail spaces, where this is, construction, manufacturing, where these things are most prevalent, you're going to expect that they're going to send you some questions on how this is going to change their payroll reporting and what they need to be doing and not doing. So just be aware that those questions are going to be coming probably pretty quickly. The SALT expansion, there's a lot here. This affects individuals as well as pass through entities. So, importantly, and this is probably the biggest change. The SALT cap was increased to 40,000 a year. So that means that if you had clients who previously had their state and local taxes limited as to how much they could deduct on their personal returns, the previous cap was $10,000. That is a humongous change from an itemized deduction perspective. Now, keep in mind the standard deduction is staying very high, so this isn't necessarily going to make a big change for all of your clients per se. But if you have homeowners and especially homeowners in higher income tax states, it's very likely that they were experiencing a cap on their itemized deduction forms in previous years, and that cap is now a lot bigger. So it's very possible that you also have individuals that were being limited to the standard deduction because it's possible that their state and local tax deduction was one of the largest on their Schedule A, and now because it's much larger, you have a change in what their deductions are going to look like. So this is something that I would say you definitely are going to want to go through your client list and look for who might need planning around this. Go back through your 1040s from last year, especially for clients that are in higher income tax states, and be taking a look at who might be impacted by this. Can I provide them with some type of value add planning service to look at how this may change their taxes for 2025? Again, effective for this year. So we're talking about returns that we're going to prepare in the spring for 2025. The phase out is there for higher income earners. So that cap is going to go down when you have higher income earners. I believe it starts to phase out at 500,000 a year for a married filing joint return. So that's a fairly high income tax earner, but just be aware that that phase out does exist. The SALT workaround was also preserved. So we want to keep that in mind. If you're someone who is working with especially closely held businesses where you're preparing the pass through return as well as the business owner's individual return, there is this workaround that exists in some states where the pass through business can elect to pay the state taxes for the business income as opposed to allowing that liability to pass through to the partners or shareholders. So if you have an opportunity to file one of those composite returns for the business itself and allow the business to pay the state taxes and then take the deduction for those state taxes, that's one way that you can prevent your individual partners or shareholders from bumping up against this limit on their personal returns. So that's something that I would also say you really want to be looking at your client list and trying to figure out who's impacted by this. If you have a high income earner, our high income partners, high income shareholders who are still going to be hitting this cap even at 40,000, maybe specifically because their pass through income is higher and that's causing their state taxes on their personal returns to be higher. I would highly recommend running some analysis for them in terms of what it would look like if we allowed the pass through business to pay the state taxes, get the deduction, as opposed to it being limited on personal returns. So this is definitely a value added service. This is something that you should be charging your clients for. I think starting with your client list to see who is impacted by this is a great place to start. And then just approach them and say, I think that this is going to affect you. I might have some suggestions on how we can try to work around this cap and maximize everybody's tax benefits under the current rules. Would you like to have a conversation? And then try to see if you can upsell them for some tax planning and strategy, because it's definitely available in the way that this expansion is going to work. So that's something to keep in mind, and that's going to affect a lot of small business owners. You have a lot of small business owners who have pass through entities. And then bonus depreciation is back. So, in case you were getting worried that we weren't going to have all those phone calls at the end of December around what can we buy to try to save on taxes, well, don't worry, it's back. So, bonus depreciation for small business is back, 100% bonus depreciation. That's on equipment purchases. So, it's not going to be on things like physical building, like real estate purchases and leasehold improvements. Now, that being said, if you have clients who are in that space who are doing a lot of real estate development, or already owning real estate and doing leasehold improvements, I would highly recommend again that you encourage them to do some cost analysis for their real estate. So, what that means is that if they're purchasing, let's say, a multifamily property, 4 unit multifamily property, the building itself is not going to be available for 100% bonus depreciation. However, if you are able to identify the broken down cost of the appliances inside of the building separately from the building itself, those appliances are things that may be available for 100% bonus depreciation. So, cost analysis on real estate development and purchases is going to be a lot more valuable than it has been in recent years, because it's going to allow for that separation between which assets in this purchase are available for 100% bonus depreciation and which ones may be subject to that longer depreciation term as they have been in the past. So again, if you're someone who's serving those clients, I highly encourage you to go through your client list and look at who might be impacted by this and start having those conversations with them now. Great opportunity to upsell them for some tax planning and strategy conversations between now and the end of the year, because this can be a huge difference maker for a lot of small business owners in terms of their tax liability. Other industries that you want to look at: contractors, manufacturers, or even just any service based firms that are making major technology investments. So, if you have a service based firm, say a law firm, that's making major investments in software development, et cetera, those are all things that you can be having conversations with your clients about to see if there's opportunities to save them money under this change for 100% bonus depreciation. So this is exciting. Vehicles are still going to be limited based off of the current vehicle rules, but still opportunity to have some conversations with your client and encourage them to do some tax planning before the end of the year. 529 plans. I have to admit, I'm kind of excited about this one. So, personally, I was never a huge fan of 529 plans for tax planning purposes. Their uses were just super limited, and there was too many other vehicles like Roth IRAs that made a lot more sense, that had a lot more flexibility from a tax planning standpoint. But the new laws have completely expanded the use for 529 plans, making them a lot more attractive than they were in the past. So the expanded use now includes K through 12 tuition. That is very exciting, especially if you have parents who are paying for private school tuition. So this is an opportunity to talk to them about potentially investing in a 529 plan. getting them some tax savings, and then using the proceeds from that plan to pay for this K through 12 tuition. Now, just be a little bit careful with this one. There's way too many details on this for me to go into in such a short presentation today. But if you have a lot of clients that might fit the mold for this one or potentially be interested in this as a tax planning strategy, I'm just going to caveat and say, read the rules carefully on this, because while we do have a lot of expanded use opportunity with the change in the laws, there are limits to this. In other words, the student loan repayment limit, I'll just give you this as an example, that's a $10,000 limit, lifetime limit per beneficiary. So, in other words, if I started a 529 plan for my husband to repay our student loans, I'm going to be limited to only being able to use up to $10,000 from that plan to repay our student loans. I'm not going to be able to repay them all, being that I'm about to finish my PhD, but it might help our tax planning a little bit. So there are limits to these expanded uses. You want to just be aware of that before you start having these conversations. Qualified apprenticeship programs are now potentially eligible to be paid for using 529 proceeds. So that one is really attractive. I think one of the things that always turned me off about this was, if I put all this money into this 529 plan for 20 something years and then my kids don't go to an accredited college, what am I supposed to do with the money? And so this is where this expanded use is really going to drive a lot of interest. The last bullet point is of significant interest, that now we have the ability to make rollovers into Roth IRAs. Perfect. So I put all this money into this plan. My kids don't use it all for even these expanded purposes. And so now I'm left with a balance that I don't want to be taxed on. We have the potential for rollovers into Roth IRAs, of course, subject to income limits and things there too. So just be careful with the nuances of this one, but it is an exciting opportunity to add some tax planning in with things like Roth IRAs and HSAs. So again, just another kind of tool in your toolbox to present to your clients who may not be taking advantage of these things right now, and kind of present to them that you have some new flexibility in tax planning and strategy that you would like to talk to them about. Energy credits are getting phased out. So if you have clients who've been taking advantage of these, asking questions about these, you need to make sure that you're making them aware that probably the time for their investment dollars to be putting in this bucket is coming to an end. So electric vehicle credits are going to expire at the end of this year. Wind and solar was given one more year. So if you have clients that had already started wind and solar projects or were already planning to invest in those types of projects, you're going to want to advise them to wrap them up sooner rather than later, just from the perspective that they're going to lose the tax benefit of those after 2026. So you see here, I say urgency should be the theme with any of these clients who have been having conversations or already started their investment in any of these energy projects. They are going to be phased out. So these aren't going to be super strong competitors in terms of tax planning and strategy going forward. So IRS challenges, I already sort of talked about this a little bit. We have obviously for, most of this year seen some really severe staffing cuts at the IRS. We've gotten no guidance on any of these tax law changes yet, which isn't really that different from some of these bills that we've seen in the past. The IRS is usually very slow to issue guidance on a lot of these things. But because all of what we are talking about today is impacting returns that we're about to start preparing in just a few short months, this is definitely something to keep your eye on and keep, your kind of ears open for in terms of what guidance is going to come. It's probably going to come at the last minute, which is going to be very stressful and frustrating for us as practitioners, also for our clients. And then I just wanted to mention that we should absolutely expect slower response times to continue, if not worsen, into the coming months. So I don't have high hopes for response times going into this tax season. And this last bullet point, what is the impact to filed returns? I'm just going to encourage everyone as we're going into another busy season. The more accurate you can make sure your e filed returns are, the better situation you're going to be in for you and your clients. So, any return that you file that's going to have any type of communication on it, even if it's just as simple as you filed a 1040 and they're asking you to confirm the information by sending in copies of the W 2s, et cetera, that is going to slow down the processing of basically everything. So, our goal going into this tax season, you want everything to be as electronic as possible, e file as much as possible, direct deposit and electronic withdrawal as much as possible, because that's going to create the most efficient scenario for your clients. Anything outside of that is we're going to have to expect those slower response times, which I'm just going to plug Tax Academy in a couple weeks one more time. We do have Practice Protect that it's going to be with us. That's a great opportunity to talk with them a little bit more about how they help support their clients in terms of notice responses, et cetera. We're seeing an inordinate number of notices. Like I mentioned, the IRS actually themselves said that they were accidentally sending notices to people that shouldn't have gotten them for balances due, simply because they haven't had time to process payments. So, all of that being kept in mind, technology is definitely going to be your friend coming into this next season, trying to cut down on more communication on returns that we don't necessarily want to have to be spending time on. So, what are your next steps with all of this? I've mentioned this a couple times. Absolutely be reviewing client files for applicability. So, you want to kind of go through this list of law changes compared to your list of clients. Who might this be impacting? Who can you reach out to and just say, hey, I think this is going to affect your return. Are you interested in having a conversation? Offer custom strategy and planning engagements to your clients, of course, for free. Make sure you're not doing this for free. This is valuable advice, and your clients will appreciate the advice. The thing that we hear most often from our tax clients is that they just want more and more guidance. They want someone to help them with strategy. Just because you said something was one way last year is not going to make it so this year. So you're going to want to revisit old advice and old strategy. If a salt workaround wasn't working in year past, it doesn't mean that it's not going to work this year because we have so many changes. And then encourage your clients to educate themselves. I highly recommend newsletters, blog posts, etc., to just make sure that your clients are aware that they do have a lot of changes that are going to impact their 2025 return. Even if they thought that there wasn't planning opportunity in the past, or that there wasn't value in paying you for strategy and planning conversations, it's very possible that that may have changed. So we have about 25 seconds left. These are always such quick education points. If there's any questions that you want to fire off really quick, feel free to go ahead and put those in the Q&A for me. I'm also just going to pop up my contact information. So if you have any follow up questions that you think of later on that I can potentially help with, please feel free to reach out to me. We will make sure that this slide deck and the recording goes out to you. So that will be available. I know I saw a question about downloading the materials after the session. We will make sure that the slides are sent out to everyone, and we'll hopefully be surviving tax season together. It's going to be an interesting one, as they always are. So, thank you all so much for being here today. I appreciate. Hopefully, this was helpful and got everybody excited for tax season. And I will see you all in 2 weeks. Make sure you are registered for Tax App Academy on September 4th, and we will talk then.